3 steps to
Hey there,
becoming a
beautiful
million
people. It's
dollar
your auntie of
financial
taxation,
firm.
Tamika Marie. And today we're diving into the pricing
What we're
power
going to
moves.
cover on the
And to be
call
clear,
today,
we are
we're
not
going to break
slapping on a
down the
higher
3
fee just
steps to
because.
automating your
Today
tax
we are diving
business.
into pricing
I'll
with
share with you why
purpose
now more
for
than
your
ever is the
expertise,
best
for your
time to join
time,
the
for
tax
your
industry if you're not
resources,
already a
for the
tax
capacity
pro
to
and who
carry
exactly
the
this program is
transformation that
designed
you
for.
deliver. This class is built for tax pros out there doing the
I'm
work, not
Tamika
just
Marie
surviving
and
tax
I've been in the
season, but
financial
pricing
field
like the
since I was
professionals that you
14.
already are.
I
So let's
own
get into it.
TMB Tax and AMP
All right,
Associates and
so
I have been
it's
in the
time to
tax
move
game
past
for
trying to
over
survive
20
another tax
years.
season
I
and
started this
profit and
journey
move
in
in power and
2001
walk
as a
in the full
franchise
value of
front
what it
desk
is that we
clerk for a
do.
major
This
big box
class is your
retailer.
official permission
I
slip to
senior
stop
clerked at
guessing,
another
stop
big name
doubting, and stop
franchise before
shrinking
going on to
when it's time to
managing and
talk about
establishing
money.
SOPs
We're
via the
eliminating
remaining
imposter
big box
syndrome at the
competitor
root and
all before
replacing
the
it with
age of
strategy,
30.
structure, and receipts.
I've been
You
a
will learn
firm
how
owner
to
for
price based
10
on facts,
years
not
and a
feelings,
service
using
bureau
real
for
math,
3
real
years.
positions,
I
and real
def know this
confidence
tax-ish.
because when you know what you bring to the
I've been in the
table, you
financial
don't
field all
discount the
my
meal.
life and I
You
have
serve it with
professionally
pride
launched
and
and
you
scaled over
charge
80
accordingly.
businesses using my accounting,
So let me be clear
automation,
before we go
and
any
networking
further, right?
connections.
Profit is not greed. Profit is how your business actually breathes and grows. It's how you pay yourself. It's how you reinvest in your growth. It's how you show up for your clients. And it's how you are going to create the legacy of your business. Without profit, you're hustling in circles, baby, and you're not building with any purpose. And I'm getting goosebumps just even saying that because it's the reality of the situation. You're producing chaos, right? And you're going to be centered in it. Name it and charge for it. Undercharging does not make you humble. And y'all know how I feel about that word, right? No undercharging. It basically strips you. It makes you exhausted. It keeps you resentful and it makes you broke. And baby, that is not the mission. And what we're here, we're not trying to compete with people, right? We're not H&R Block, we're not TurboTax, we're not the $99 special that's down the street. Don't do that. You are not volume based and you are not a one size one fits all operation. You're boutique. That's pretty much what we are, baby. We're boutique, boo. All right. So you are strategic and you are transformational. We ain't H&R Block. You're better. Say it with your chest and then back it up with a price that's going to reflect what you actually are. Not all tax pros do the same work. Let's be clear about this. So, why would we ever charge the same rates? Some of you are knocking out 1040s all day, and some of you are deep in the trenches with Schedule C's, we're reconciling messes. Some of y'all still taking shoeboxes and receipts and translating it into compliance and resources that the IRS can understand. Others are holding it down for their I-10 clients, small business owners, and folks that are facing audits and collections. And some of you guys are handling representation, CAA, filing entity structures, tax strategies, and planning. So, no, one flat rate is not going to cut it at all. You've got to get crystal clear on the type of pricing and what your tax lane is, the type of work that you do, the depth of your service, your offer, the value you bring to the table before you even think about setting a price. So, I need y'all to start taking some notes because when your scope expands, your rate had better rise with it. Your lane is your leverage. You need to own it, you have to define it, and you have to again charge accordingly. So now let's talk about that. When it comes to pricing, you want to think beyond the form and you want to think in tiers, okay? Basic, standard, premium, and then we can even go a little bit further and let's throw out executive. Each one of these tiers should be solving a different level of problem or commanding a different level of investment. Make sure that makes sense. Your basic tier might be your straight 1040, no frills, right? You could throw in maybe a W-2, maybe a Schedule D, or maybe, well, no, back that up. Maybe a Schedule B, a little bit of interest. They might have a child. That's simple 1040, okay? Your standard could include a state return, simple credits, and a year-round email support, right? Now, your premium, that's what you bring in your strategy. Maybe it's a Schedule C. They're going to require some estimated payments throughout the year, some tax planning. So you're going to have some touch points where you're going to be following up with that client throughout the year. So you want to make sure that you built that into the pricing as well. And then executive, that's kind of like your VIP status, right? It's audits, it's entities, it's advisory, it's maybe a monthly check-in, or maybe even some concierge services that you're building. So we're going to do high touch, high trust, high ticket type of stuff when we're getting into the executive. So you don't want to just sell the tax forms because those are basically everywhere. You're selling the access to you, your expertise, your team, and the value that you've cultivated by your continued education. All right. So you're selling the outcome that your clients want, which is the peace of mind, the compliance, the cash flow, maybe. You know what I mean? If you're on more than just their compliance side, the clarity, and then staying off of the IRS's radar because nobody wants to get those letters, right? Your pricing should reflect the transformation that you deliver, not just the transaction that is complete. Okay, I want to expound a little bit more about the dangers of the one size fits all pricing. When you charge everyone the same flat fee, you're automatically creating gaps in your income, and they're usually going to cost you, and it's going to make you feel resentful. Because here's the truth: some clients are going to be low maintenance, right? In and out, no drama. You won't see them again until next year. And others are going to be high effort, high touch, and time consuming. And if your pricing doesn't reflect that, then guess what? Not only are you losing out on your profit, you're the one who's going to be drained. Um, Leaving you without money you're leaving money on the table, and no one will see your value, right? When you try to transition into charging for your value, you're going to lose clients. People are going to walk away. So you want to make sure that you're setting those boundaries. That's backwards, and it's a recipe for resentment. You're going to resent yourself. You're going to start to resent your business. You're going to resent your clients. You're not going to want to deal with them. You've got to tailor your pricing to the client experience, not just the form that you are completing. All right. So tier it, customize it, and protect your time, your energy, and your expertise, because this isn't just about what you do. It literally is the service and the completion that you are providing. I like to always tell people when we're in the side of compliance and taxation, we don't prepare refunds. We don't do tax refunds. We do tax preparation. The preparation is literally our service. So when you're delivering that service, the end result is the client is going to be in compliance. They should walk away with the complete set of records of whatever it is that they provided you with, cleanly packaged and delivered back to them. And someone, not even you, if they walk away and you never see that client again, with those papers, someone should be able to pick it up and continue where you left off. So you also want to make sure that when you're sending your stuff out for your client, that you're creating a clear picture of everything that happened with their taxes. I cannot stand when I get returns that don't have a depreciation schedule in them, because baby, what are you doing? Why are we holding their forms hostage? So you want to make sure that the transformation, the service is about the transformation that you are providing for your clients. Keep it cute, keep it classy, tier it, customize it, and make sure that the experience that you are providing and you're charging for is one that you're fully delivering upon. All right. So let's get into market rates. You cannot set powerful, profitable pricings in isolation. You got to know what's happening in the market that's around you. Pricing without context, you're basically just guessing. So I want you to start local. All right. Here's what you're going to do. What are other tax businesses in your city or region charging for similar services? Not to copy them, but to understand and level your playing field, right? Then I want you to zoom out. What are the big bots brands offering? H&R Block, Liberty, TurboTax, Jackson Hewitt. Check and see. And yes, when you say TurboTax, you're like, they don't charge the same thing. No, they don't. I have been a TurboTax representative in the past before. So depending upon the complexity of what it is that they're completing, they've even upped their game, right? And I even want to say that you may be paying a little bit more depending upon what your region is, right? All right. So, what do they include? And more importantly, what do they leave out? Then I need you to tap into your professional circles. What are your other professional friends charging in your online communities, masterminds groups, tax associations? Are there trends around the pricings, packages, and service tiers? Are there and also the advisory as well? This is not, again, comparison is the thief of joy. I say it all the time. This is literally about positioning. When you know what's out there, you can confidently decide where you want to sit in your pricing, right? Whether you want to go above, whether you want to match, whether you want to go below. But it has to be on purpose and not just by some whack default that you came up in your mind that says that H&R Block is charging, you know what I mean, $120, so now you want to charge $99. Are they your ideal client? That's the real question. All right. So, market research is going to be your baseline. It's your pricing compass. You need to use it wisely and set your rates with your eyes open. So let's go ahead and take all the fear out of the pricing conversation. The easiest way for me to be able to do that was to automate it, because too many tax pros see someone charging 99 and think maybe I'm too expensive, and then they see someone else charging 1500 and they think I can never charge that much. And that's emotional whiplash. That's pretty much what you're doing. You're torturing yourself, and it keeps you stuck in a comparison mode instead of a CEO mode. And I need you to unlearn that today, because the truth is your pricing can't be a popularity contest. It has to be a positioning decision, and your rates have to be based on what you bring to the table, the results that you consistently deliver, the systems and workflows that you've built that make the process smooth and secure, and the experience that your clients get when they work with you, not just the return, but also the relationship, but also the boundaries that you establish with your business that serve you and not just your inbox. When you price based on that type of clarity, you're not moved by someone else's flyer, their sale, their gimmick, their shtick. None of that matters, because you know your receipts are going to match your rate. You don't price from panic. It's going to put you, again, goosebumps, in a horrible position. You don't price to keep up, and you don't price based on what someone else is doing. Comparison, your market research is strictly for you to be able to know where you need to land regionally, right? You want to price from power and on purpose. All right, let's get into this mindset that you're not trying to be the cheapest option on the block. Remove that. Let the cheap guy be the cheap guy. You want to be competitive, but you don't want to be cheap. That's not a goal, it's not a brand, and it's not a strategy. Here's what happens when you position yourself on price alone. You become replaceable, because the moment somebody else comes on with a better price, a lower rate, that client, it's gone anyway, because loyalty is not built on discounts. Okay. Loyalty that you build on a discount is loyalty that will leave you broke again and feeling cheated, like you cheated yourself. You're going to be like, I normally charge $500 and I charged you 300 and now you're ungrateful. Yes, they're ungrateful because they're cheap, baby. You're not here to be a discount or a value brand. You want clients to choose you because of your insight, your protection, your access, your accuracy, and the excellence that you provide, not because they're hunting for a deal. Get off Groupon. That's what's going to make you competitive, okay? Not your pricing, but your positioning. Your positioning makes you competitive. Being competitive means that you're relevant, you're timely, you're trustworthy, you're solving problems with real results, you're accountable. So stop trying to win a price war. You're not. Somebody's going to always be able to outprice you, right? I don't know what everyone's background is, but someone will always be able to outprice you when you're trying to go low. Someone that has more time, more resources can always go lower for a certain amount of time to be able to price you out. So stop trying to win the race to the bottom. And if you're winning, and if you're trying to run that race to the bottom, please just log off. We're not compatible, because I'm trying to teach you how to go up. All right. So instead, build value so undeniable that your pricing is going to be a non-issue. Remember what Evelyn said, a non-fucking factor. That's what we're heading for. Head over to your resources tab and snatch up the competitive resource tool, and let's do the work. All right. Now, let's get into the numbers of how you build your pricing strategy. If you've been pulling your fees out of the sky and charging based on bills, or just trying to stay affordable, it's time to upgrade that entire approach. And this isn't just about a number formula. Sorry. This isn't just a number that you specifically feel good about, right? We're not talking like angel numbers where I'm going to charge $555 because that's the number that someone told me was going to make me win. We're not doing that, okay? Your income model needs to be based on your pricing formula. And I want you to make a note for this, right? Your time is your time and hourly rate plus your overhead plus your profit. Profit is going to equal your fee. Okay. Formula is so simple. It's so simple. And here's what this really means. Time. How long does it take for you to complete the service? Not just the prep work, but the emails, the follow up, the organizing of docs, answering questions, fixing any type of messes that may come up. So you're going to have to kind of guesstimate on that. And the wait times. That time is money. Anyone who does taxes, if you're not, depending upon how you've got your office set up, say for example, you may be remote. So you're not having someone come in and sit down with all of their documents at one time. We know that it may take a few days, sometimes a week, or even a few weeks for us to get all of that documentation. And that client is sitting in there on hold. And there may be anywhere from 2 to 10 emails in that slice of time that has to go out as we're negotiating and going back and forth with them about what it is that we need. Because we know one form can change the entire scope of what it is that we need to do with that tax return and open up a whole new plethora of organizers and questions that we have to have answered in order for us to prepare our due diligence. That's our time. We need to account for that. All right. Your hourly rate, and not the cut rate either. This is the rate that aligns with your skill, your credentialing, your demand, and your value. So sit with that for a minute if you need to. If you are a regular tax pro and you're only taking your minimum of 18 hours, and you know what, I can't even say the minimum. If you are only doing your after or your annual season, then a regular lower rate might work for you. But if you are the type of person that gets up and goes to these conferences and you are investing hours upon hours, hundreds of hours on a consistent basis in order for you to be able to get in, to get the knowledge that you need to be able to provide your services, you better charge for that. My hourly rate, it ain't $25. It ain't $50. It ain't even $80. My hourly rate is there, babes. So you need to be able to account for the expertise that you are delivering. All right. Next up is your overhead. This is the cost to be in business. Think of your software, your renewals, your CE hours, your E&O insurance, portals, admin time, and yes, even your Zoom subscription. That is your overhead. It needs to be covered. And if you have locations, add that rent and utilities in there. If you ran a business bestie playbook, then you've got all of this figured out. If not, please head on over to the business bestie playbook and write down everything so that you can understand, run through it so you can understand exactly what your overhead looks like and get that formula created to pull out what your overhead pricing is per return. All right. And then your profit margin. This is where most folks forget. Profit is not extra, it's essential. You need it built into that margin so that your business can grow to sustain itself and pay you, not just to survive tax season. So again, it's not a vibe, it's literally math. We in the finance business. You are, whether you choose to realize it or not, when you step into this, you are essentially a finance bro, right? This is your pricing blueprint, your wealth formula, your CEO math. You have to use it and stop leaving money on the table. If you got to press pause, please do that. Head over and grab the Business Bestie playbook and then run the math so that we can come down to realizing what our fee is. All right. Next up, pause for a second and ask yourself this question. What does it cost to be you? More than just a software license or your EFIN. And I mean the real, every single month, non-negotiable cost to doing business, baby. And let's break it down. You've got your PT renewal that you need to file. It costs you yearly. Continuing education, CE, whether you're maintaining an EA credential or whatever, or staying sharp on tax law or just being compliant. That's time and that's money. You've got tech subscriptions that include your tax software, your client portals, CRM tools, Canva, Zoom Pro, and even your support tools and teams. These tools don't run for free. Admin support, whether it's a virtual assistant, an in-office staff, or your own time spent doing admin tasks, all of that counts, right? Office space or utilities, whether they're home or a leased office space. You've got rent, Wi-Fi, and even ink and paper. All of that matters, and it adds up. Marketing and branding, your website, domain renewals, email tools, design costs, they all live here. Your compensation plan, because you the CEO, you're a cost. And your time has a value that requires the perks too. Think about your health and retirement costs for your structure. All of these pieces create your business baseline and your financial floor. If your pricing doesn't at least cover this, then you're not running a business. You're funding a community service. We don't work for free, not anymore. And if you have been, say not today. When you are running, not when you're running with me. Okay. So before you throw out a flat fee or match someone else's rate, do this math. What does it cost to be you every month? Because that number, that's where your pricing is going to start, not where it ends. All right, we're really rocking now. I gotta take a quick break. I'll be right back. Be parched. Okay. So let's really expound on the cost of doing business, or CODB. Remember, this is more than our administrative costs. 20 Tax Pros look at a few annual subscription fees, 600 here, 900 there, and then they call it a day. But that's just really the tip of the iceberg. So again, your COBD includes everything that it takes to operate, deliver, and sustain your business. That means your tools, from your software, client preps, all of that good stuff, cybersecurity. It all plays a part in your workflow, and every login that has a cost, right? Your time, every hour you spend onboarding clients, following up, sending reminders, and even just mentally managing the chaos. Um, that time that time is a cost, whether you're paid or not. And then your capacity, you only have so many hours in a day. If your pricing doesn't account for your bandwidth, you're going to end up overbooked, underpaid, which leads to burnout, right? And then there's seasonal surge support. During tax season, everything intensifies. We all know this: more clients, more chaos, more hours. That might mean you need temporary help, faster tech, extra filing support, or weekend availability. And guess what? That costs too. The purpose is to stop treating your business like it's a side hustle and start honoring it like a full operation that it is. And if you want a sustainable profit model and not just a seasonal of survival, you need to price the way that covers your real CODB numbers. Every resource, every tool, every ounce of energy. If it costs you, it needs to be priced into what you're charging. Let's talk about the difference of billing by form and billing by outcome, and more importantly, when and why to use each. If you're newer to the industry, billing by form can be a solid starting point. I remember probably a few months ago, I noticed that there was a shift where a lot of people in some of the tax groups were talking about, yeah, I just updated to billing by form, and so on and so forth. And that was actually the model that I learned on. I learned, sorry, I got to clean these glasses. I learned how to build my business by charging by form, because even back in 2005, when I really jumped out here, billing by the hour was a no-no, because the hourly rate was ridiculous back then, right? So even then, I want to say that we were charging, and I was not under my own business in 2005 for taxes yet. But I would like to say that even then we were charging 450 for a basic tax return back in 2005. So don't let that fool you, right? But again, billing by form can be a solid starting point. It's tangible, it's clear, it gives you structure while you're still building confidence in your pricing. And then if anybody ever bucks back, because sometimes clients like to nuck when you buck, right? You can clearly provide them with the asset that they need to understand why they were priced accordingly, right? So it can kind of remove that scary feeling, because most softwares, all you have to do is download the report for the pricing sheet and give that to them. Like, hey, okay, you can see you needed this form and this was the charge for that form, and you were requesting to file head of household, you know what I mean? Or you wanted married filing single. And when we ran these numbers, this is what it was. So if saying a 1040 is $200 and a Schedule C is 150 and each state return is $50, it helps you to stop giving away your work for free. And baby, start there, because that is very valid. But as you grow in skill and confidence and capacity, you'll hit a ceiling where outcome-based pricing is going to be a better option for you. Outcome-based pricing is when you've moved beyond the mechanics and into a little bit of strategy. When there's no longer just inputting data, but delivering insight. And when clients aren't just coming to you for a form, they're really coming to you for a transformation. That's when you stop counting forms and you start charging for the full experience: the peace of mind during audit season, the year-round support and compliance strategy, the advisory relationship and the growth planning, the access to you, right? Your time, your brain, your expertise. I know I've got a client that always asks me, am I talking to my friend Tamika or business Tamika? Because I have to ask you a question, baby. We ain't friends when you asking business questions. Um, and we don't want to stay in that place forever. So no, we're not canceling form-based pricing, but we're using it as a foundation, right? Because you can't stay there forever. As you scale and you shift, you evolve. Yes, I charge for phone calls. Yes, I charge for responding to emails. And depending upon what pricing structure that my client is in, because I've got different locations, and unfortunately different locations have different pricing structures. So depending upon what depending upon what pricing structure that client is located in, it will let me know exactly what it is that I'm doing. If they're going to get an individual charge for that email, or if they are one of my personal clients that is in my business model, then it would automatically be built in because they're either on a quarterly or a monthly billing cycle anyway. Okay. So start where you are and pricing with clarity. Grow when you're growing and price with confidence. The research check that I want you to do is the profit first calculator. It's connected into your link up, and that will help you to be able to run the figures on whether you want to be a flat fee or a value based fee person. All right. So head over to the profit calculator. You don't have to pause this. You can run it when you're done, but just make sure you make your notes to do your profit first calculator. All right, last, let's talk about the competitive edge of the things you do that make your service not just available, but valuable. All right. And it's time to stop treating those things like extras. They're assets, and the assets deserve premium pricing. All right. You speak Spanish or offer multilingual services. That's not just being helpful, that's cultural access. That's market reach, and that's a business advantage. Charge for it. Because I guarantee you, most likely, if you have a person who is multilingual, they want to be paid for it, as they should. As they should. Don't be basic and just know one language. Do you serve business clients all year long and not just during tax season? That's stability, insight, deep client relationships, and it costs to keep that office open, right? That's advisory territory, not just seasonal support. Charge like it. Are you known for quick turnarounds? Can you pop out a tax return in 24 to 48 hours? That's priority access, and that's a workflow optimization. It's trust. And if clients aren't skipping over tax pros to wait for you, that's proof of value. Charge like it. Your edge might also be evening or weekend availability, mobile or virtual appointments, niche knowledge like truckers, beauty industry, or landlord property schedule ease, concierge style onboarding, or white glove experience, bonus services like financial coaching or credit tips. Whew, okay, none of that is extra. All of it is elevated. And if you're offering elevated services, your pricing should rise with it. So the next time you're tempted to discount your edge, remember what sets you apart is what sets your price. And even if they want the experience, they've got to match the energy with the investment. All right, let's talk add ons, also known as low effort, high margin money makers. All right, these are the services that stack value for your clients, but do not drain your time when they are done right. They can shift your revenue structure without requiring more hustle. All right, so top one, audit protection. It's a simple system to implement. It offers clients priceless peace of mind. You're not charging for a form, you're charging to stand in the gap if the IRS ever comes calling. Totally worth it. Most systems allow you to offer audit protection, and you can even mark it up. Doesn't cost you a dime, not even in time. Okay. Bookkeeping bundles. A little monthly cleanup goes a long way. And for business clients, it keeps them coming back quarterly, not just annually. Recurring revenue, less chaos, more control. Because when you know what's going on with their back end financials, even though we only have to ask the questions, it's not required for us to physically retain the information. It gives you a little bit of a peace of mind, and it's more income if you want to pick up on the bookkeeping. All right. CAA filings. If you are a certified acceptance agent, you already know this is a niche service that most tax pros don't offer. And because it's specialized, you can charge accordingly. Entity setups. Entity setups. Helping your clients form LLCs or corporations isn't just about the paperwork. And you also want to make sure that you are in compliance with your local state laws, right? But helping them to be able to set up their entity is strategy. It's protection. It's a financial foundation. And yes, it should come with a premium fee. These add-ons aren't extras. They're an extension of your brilliance, and they allow your clients to get more support, stay compliant, and move with confidence without you working overtime. And here's the real key. They're optional, so they should not be discounted. They're upgrades, they're not favors, and that's what's going to make them and you profitable. So if you're already offering these things without pricing them separately, it's time for you to change that because your margins matter. And these are the moves that keep you in business and in the black without burning you out or your calendar. So I want to be crystal clear about this. This is about raising your damn rates unapologetically. because you've been undercharging, over delivering, and shrinking your genius for far too long. But it's not about charging more for the sake of it. You have to finally charge the way that honors your value, your effort, and your capacity, not your neighbors, not sis down the street. Okay, you and what it is that you bring to the table. All right. So, yes, we are raising rates, but we're also raising boundaries. We're raising expectations. We're raising standards around what it actually costs to work with someone like you, boo. All right. You don't just show up, you deliver a peace of mind, IRS protection, strategy, and structure. So if you are knocking all those four boxes off, and that doesn't come with clearance rack prices, because charging more doesn't matter if you're still stuck in a pricing model that works against you. We don't just charge more, we charge smarter. And this means taking a real look at what's draining your energy and stretching your capacity and eating up your calendar, and then bundling those high effort services intentionally. Does the client need a 1040 and a message schedule C? Are you answering emails and tracking down missing documentation? Offering reminders and coaching them through deductions? That's not a simple return. That is a service bundle. That's time, expertise, capacity, and it needs to be priced accordingly. So here's your shift. Don't let your highest effort work be your least profitable. Don't let your most involved clients get the same prices as your easiest ones. And absolutely don't separate out the pieces so small that you nickel and dime yourself out of a client. It's like kismet, right? It's a fine line. It's a very thin line. It's like the tectonic plates scratching up against one. We don't want an earthquake. We just want to be able to shift accordingly into our purpose of charging to be profitable. So package the work, set clear boundaries, and price for the transformation, not just the task, because your time is not unlimited. We do not have unlimited time. It's the only thing that we can never get back. Your energy isn't free, and your knowledge should not ever be up for negotiation. Protect it, price it, and profit like you mean it. So, one of the things that I know that I consistently experience is sometimes not being able to hold a conversation strictly around money. I gave you guys some pricing scripts that can help with that. So when you guys get to the resources tab, just make sure that you go and check out the pricing scripts, because you'll run into a situation where you may not know exactly what your fee is, and I've done that before. Oh, I think it's about $300 or something and people will think that that's literally a quote. So what I like to remember to say now is, I'm not 100% breast on the actual rate, but I'll get you a quote, or I'll have that over to you in just a moment, or don't quote me, but I think it starts somewhere around, right? So I gave you that scripting so that you can go in and take a look and just overview it and start to pull some of that practices into how you approach your client when you're discussing money, so that you don't feel like you are expected to give something. You've already gave your service, all right? If you're running a service bureau operating as an ERO network, your pricing can't be flat or basic, because your responsibilities aren't. You've expanded from filing taxes, you're managing infrastructure, people, platforms, and performances. This means that your pricing needs to have layers, and it needs to reflect the entire operation and not just the front facing service. So let me break this down, right? Tech splits. Are you providing a software access to affiliate preparers, whether you're offering back-end logins, branded platforms, EFIN support? That tech comes with a cost. Your pricing must include the percentage or the flat tech split to protect your margin. Access fees. Are your affiliates tapping into your team, your systems, your secure portals, your compliance tools? That's not free, baby. Okay. That's access with value, whether it's marketing resources, help desk support, branded client forms, that build that into your rate. Training packages. Are you coaching your network? Y'all here, right? Offering compliance support and providing onboarding for new affiliates. That labor, knowledge, and content must be priced as a product. Even if it's the part of the partnership, it needs to be treated like an internal billable asset, not a favor. Now, I know a lot of us are tax pros, and it's so weird that a lot of tax pros do not handle their own bookkeeping the way that they're supposed to. If anybody needs a breakout session so we can go over charts of accounts on how you should be setting up your income structure on your bookkeeping, you guys have the link to be able to schedule the one-on-ones. Please, let's do that. Or if I get enough people that request it, I guess we can turn that into a class too, where we can talk about how to build out that chart of accounts. But it's extremely important that we know where each facet of our income is coming from. And I'll tell you why. Because in order for you to be profitable, not only do you need to know where you spend your money and how much you spend it seasonally, right? And where the pricing margins affect your dips, you also need to know where your income is coming from and when you get that influx so that you can market accordingly. But that's a class coming down the line. We getting there. We getting there. All right. So admin and oversight. As a bureau or network lead, you can carry risk. You handle reporting, revenue splits, troubleshooting, tax software licensing, and other customer service support. That administrative burden must show up in your pricing model. This is a scalable platform, not an affiliate or add-on. And the only way to sustain your network without burning out or bleeding profit is to price with layers, intentionality, strategically, and unapologetically. Because if you don't build the cost of leadership into your fees, you're not leading, you're sponsoring. Let that sink in. Okay. All right. If you're leading a service bureau, building a partner network, you've got to set your people up to win. And that starts with how you package your offers. All right. Your partners aren't just your tax pros, they're entrepreneurs trying to navigate a market of compliance, client services, and still stay profitable as well. If your structure is confusing or hard to pitch, then guess what? It won't sell, it won't scale, and it won't stick. So here's the rule: make it easy to sell and even easier to explain. This means done for you packages. Don't leave them guessing to what's included. Build out the plug and play service tiers that already factor in tech, form support, audit, upgrades, and all of the options. The more clear the package, the more confident the affiliate's going to be. All right. Templates and scripts, give them the tools to talk the talk. Pricing scripts, engagement letter templates, onboarding flows. That's what takes them from a hustler to a professional. Software support bundles, don't just hand them access to the platform and hope they'll figure it out. Pair your software offering with coaching, admin support, and weekly check-ins. That bundle is what sets your bureau apart from everyone else that's just reselling software. Again, you're here, so you definitely understand the concept of receiving the training, but you also have to understand that when you transition from just a tax pro to an ERO or to a service bureau, you have the responsibility to be able to provide your downline with the tools for success. So just giving them some stuff and saying, go be happy, is never going to be enough, right? You have to avoid complexity. If your downline needs a flow chart and a calculator to understand the offer, then it's too much. Keep your tiers clean, your value obvious, and your pricing aligned with the outcomes, not just the features. This is about helping them to make money and to build a brand that scales with systems. When your network can clearly pitch, price, and package the offer, you multiply your impact without multiplying your stress. Simple scales, complicated stalls. Give them the blueprint and watch your entire network rise accordingly. And let's be honest, you can't scale anything successfully if the math isn't consistent, period. When you're running your bureau or as an ERO, leading a tax office, or managing multiple clients, consistency is queen. It's not enough for the person to be profitable while everyone else is winging it. If your pricing isn't aligned across the board, you're building chaos and not a company. So the same things into the structure that you set up for yourself, you need to also make that available to your team. They need to understand why the pricing is set the way that it is. Right. And it also, as a sidebar, not that we really care, it also helps them to not count your money when they understand how the back end works and what really goes into it. Because some people are like, I don't understand why the split is blah, 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 blah. Well, baby, you just show up and put some keys in and you truly enough brought the client. But we provided the training, the resources, the tools, the follow up in all of the XYZ. So here's what that really means. Every office, whether you've got 2 locations or 20, every site, they need to follow the same pricing logic, not identical numbers, but consistent margin rules. Remember I said earlier that I've got different pricing structures for different offices. It depends on the location and the market rate of that, not just that location, but also the client avatar that we've got for that particular location, right? So some people are going to get charged by form, but for my office that I operate virtually for myself, value-based pricing. 100%, right? So you can flex based on region or demand, but the formula needs to protect your profit everywhere. Every affiliate, if some of your team is charging $500 for a business return and others are doing it for 150, you've got a brand problem like no other. And you've got a profit problem. Inconsistent pricing creates confusion, erodes value, and makes it impossible for you to forecast your revenue. And don't let your clients find out, oh, Tamika and Tammy work in the same office, and Tamika charged me $500, and Tammy did it for 150, and we're friends, and I want to know why you got charged more. So be be ready for that conversation if there's no consistent pricing under one brand. All right. Every client tier. Don't let your clients, your premium clients, pay basic prices just because someone on your team was afraid to quote them the full rate. This is where my automation comes in. If it's a high effort service, it needs a high integrity price tag across the board, because real talk, when pricing is sloppy, margins leak. And when the margin leaks, the profit dies. And you cannot afford to have one side of your business killing it while the other side is bleeding money in the background. Your pricing needs discipline. Your pricing needs documentation. Your pricing needs training. And if necessary, your pricing may need some automation as well. But that's how real businesses scale, with structure and not guessing. We can't guess. Your clients can't guess. Your downline can't guess about what it is that we're doing. So you're going to have to tighten it up and standardize all of your margins and watch your bottom line rise as your leadership skills do. Because being firm about what it is that we're doing is 100% walking in leadership. All right, let's talk about how you say your price, because how you present it is just as powerful as what you charge. When it's time to quote your fee, please don't be humble, and please don't mumble. Do not whisper. Do not wrap it into an apology. Oh, I'm so sorry. We had to raise our rates this year because of a recession. Baby, everybody knows a recession. You don't have to apologize for that. Lead with clarity, lead with certainty, and lead with boundaries. Here's what's included. This isn't just the form. This is a full package of strategy, compliance, and protection. Outline it with confidence, the return, the review, the support, the turnaround time. Tell them what they getting, baby, and sell it. Sell it. Because not only are we in taxation and compliance, we definitely in sales, each and every last one of us, from the service bureau to the ERO to the tax pro. We're all in sales, and clients need to understand that they're paying for value and not just that piece of receipt. Okay. So things that you can say. Here's why this rate applies. It's a business. Is it a business return? Did they show up with 5 W-2s and a half-built LLC? Is this their third audit letter this year? Say it. Let them know exactly why this is a premium tier service and why your rate reflects complexity and expertise in the solutions that they need. Here's your investment, not your price, not your fee. Your investment, because they're not here paying for a task. They're investing in the protection and peace of mind and staying out of the IRS's underscope, right? This is positioning, ownership, and confidence. And don't you dare flinch, baby, because your price is not just a number, it is a boundary. It says, I take my work and my delivery very serious. It says, I don't work for free. It says, I value my time. And if you want access to this level of service, this is what the exchange is, right? Talk to your client like you talk to your man, baby. And if you don't know how to talk to your man, that's a whole nother conversation. And if they try to negotiate you down, this is a sign that this is not going to be a good deal. Now, I'm not saying that you need to walk away from everyone, because I love helping little old ladies. That is my thing. That is definitely my thing, right? I want to be able to be I take my how I show up in the community for certain people. I take that extremely serious, for my veterans, for my seniors, for my students. You know what I mean? People that are in college trying to make it, people that are retired, you know what I mean, trying to figure out how they're going to be able to hold it together. People that are in the military are also generally severely underpaid too. So I will work with them. But if I've got, you know what I mean, a six-figure maker over here that doesn't want to pay the $850 for my business return, I'm not going to deal with that. You make money just like I do in business. So there has to be a mutual respect, right? You don't need to justify. You just need to stand firm. What we say, foot on neck. Say it, mean it, stand on it. Because when your pricing is rooted in value and backed by receipts, you don't need to explain it. You just need to deliver it. This is what it is. Take it or leave it. Okay, great. And I've had clients walk away and say, you know what? I do understand, but I just can't afford it right now. And if I couldn't work with them, they generally still might leave and come back. Everybody ain't for you. Everybody can't be your client, and that's okay. So let's make this clear, because you're not Dollar Tree and you're not Walmart and you're not running a retail sale aisle. Remember, we're graduating from pricing like we're on a clearance rack. You are a tax professional, a strategist, a protector of people's financial lives, not a bargain bin brand. And your fees, they ain't coupons. You cannot operate like Walmart because you don't have the capacity to operate like Walmart. We don't get discount bulk pricing. Discounting can be a knee jerk reaction, all right? To win clients, to beat the competition, or to soothe your own imposter syndrome on the inside. But I'm trying to tell you, it's going to drain your profit and diminish your power every time you say, I can knock a little off for you. What you're really saying is, I'm not sure that I'm worth it. And baby, that's a lie. Now, this doesn't mean that you can't be generous. It means that you need to be intentional about your generosity. Referral credits. If someone brings you business, reward them, right? A $20, $50 credit for a new full paying client, get your pipeline flowing and your value circulating. I love to hand out them gift cards, okay? Loyalty perks. Long-term clients who file with you every year, give them early access, priority scheduling, or even a small bonus service, but not a blanket discount. Service incentives. Want to drive traffic in December or boost off season business? Cool, right? Overtime bound. One moment. Offer time bound bonuses like a free 15-minute consult or audit protection at no additional cost, but not a permanent markdown that's going to have you losing out on revenue. There are thousands of ways for you to be able to retain and incentivize your clients without discounting your actual work, right? If Here's the rule: if it's not planned, it's not a promo. It's panic. And this is where you take advantage of your prepackaged holiday calendar and craft those deals and plan those campaigns. You want to give it honor, not fire sale, right? You're giving them in honor of being able to work with you. You're not a bargain discount brand. So you have to hold your line. You can be professional and firm and kind and non-negotiable, warm and premium. Because when you discount your prices to please everyone, you literally are slowly devaluing your brand you've worked very hard to build. So no, you're not a retail, you're a real value, and real value does not go on sale. Confidence is what's going to close your deals, not just the numbers, not just the forms, and not even just your experience. You really do have to speak from a place of being assured, because I'm not going to give you my financial information if you are not assured of yourself. Now, please understand, everyone isn't a talker. I had to train myself to become a talker. And even now and again, I will have the words in my mind and they just don't come out right. I'll have to slow it down, say, excuse me, take a sip of water or whatever the case may be. Figure out how, figure out what your click is and come on with it. Clients don't just buy the service, they buy you, your energy, your certainty, and your presence. And if you sound unsure when you're quoting your price, if your voice drops, if you can't look them directly in the eye, right? If you shifting, you nervous, but we could work something out, they feel that. And guess what? If you shake, they walk either out the door or all over your future business dealings, not because your service isn't good and not because your rate is too high, but because your demand didn't match how you valued yourself. Confidence isn't arrogance, it's alignment. It says, I know what I bring to the table. I've done this before and I can do it well for you. This rate isn't random, it's rooted in skill, strategy, and structure. Keep repeating that: skill, strategy, structure. Write it down, make it your mantra, put it on your window. Put it on your mirror when you wake up in the morning. Skill, strategy, structure, because that's what is the focus of the entire process of your pricing. And look here, I don't know why you got into this business, but for me, it's the negotiation. So when it's time to state your fee, do it without flinching. Look them in the eye or in the camera and say it like it's already understood, because it should be. And for this rate, it's going to be $850. And what we normally do, blah, 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 blah. And just keep on going. Don't pause for effect. Oh, yeah, it's 850. Nope. It's a drop in the bucket. Your value is not a secret. Don't whisper it. Don't water it down. Own it out loud, because at the end of the day, clients trust your confidence. That's what they're here for. They're not confident. Otherwise, they'd be doing it themselves. You have to back it up with confidence. Confidence signals competence, and confidence gets the coin. So train your voice and practice your delivery. Stand 10 toes down on your expertise. The price is the price, and the right clients will respect it when you do. So again, go back and check those pricing scripts if you have issues with it. Write down how your ideal way to be able to deliver your pricing. It's not going to always go that way, but at least you have a frame of how you can start the process of delivery if talking about money is an issue for you. All right. Raising your rates isn't arrogance, it's alignment. You don't raise your rates because you feel like it. You raise them because the map, the market, and the momentum say it's time. The top three reasons to raise your rates is when your skill increases. That means that you've invested in learning and you gain more CE and insight and accuracy, or more speed. You solve the problems faster, smarter than you used to, and that value demands a raise. When the demand increases, the more people want to work with you, the more selective you get. Scarcity increases your value. And if you've been booked and busy, but your income isn't reflecting it, that's a sign that you've outgrown your price points. When you value increases, this isn't about being fancy. It's about offering a deeper service, better outcomes, tighter processes, stronger systems. You've elevated the client experience, and that elevation has to be reflected in your rates. And here's what we don't do. We don't apologize for evolving. We don't explain away our growth. We don't keep charging beginner prices when we're serving at an expert level. The math is the math. You raise the rates the same way you increase your standards, with intention, data, and boldness. Because the truth is, you've already earned the rate bump. Now you just need to walk in it. Let's talk about how your invoice is communicating your value, or possibly not. When you itemize every single line, $40 for a Schedule C, $25 for a dependent, $15 for the state, you're inviting a little bit of scrutiny. You're giving your client a breakdown that they can pick apart, question, and attempt to negotiate. The kind of service says, here's a menu. And you know people like to debate it. You're not running a cafeteria, you're running a business, a financial service, a professional practice. Form by form invoicing makes you look small. It turns strategic, comprehensive tax work into a pile of a la carte charges. And here's what happens. Clients start saying, do I really need? Yeah, we know you all need the forms. Can I take off audit protection? No, you can't take off audit protection, because, or you can, but you have to explain to them that if they do get audited, what your rates are going to be. And I also like to put that little tidbit in my contract as well. All right. Why did this cost more than last year? That's not how CEOs invoice, and that's not how retails operate, right? What I would say is one line item, one solution, one problem, right? For example, you can say tax prep package includes the premium package, 1040 Schedule C, up to 2 states, audit protection, and 30-day follow-up access, $495, right? Now, I wouldn't charge $495 for a Schedule C, but that's just an idea of how you can put everything together. Now, if they want to see the per form pricing, sure, that's not a problem. But I wouldn't lead with the invoice to say that. It's clean, it's professional, and it's anchored in results. And most importantly, it makes it hard to argue with your value. I had someone ask me, why do I have to pay, $20 for the Schedule B when I only had 75 cents, a dollar in interest? Because if I leave it off, do you know the problem's going to be? So yeah, the goal is to move away from pricing like a technician and start presenting like a strategist. You're not selling parts, you're delivering your peace of mind. So structure your invoice to reflect that transformation and not just the transaction. And when you say it, present it with confidence. This is your package and this is what's included. And here's your total investment. Or, here's what the cost is going to be. No line by line debate, no nickel and dime energy, just clarity, confidence of their full experience, because charging is transactional, right? It's about what does this cost, but packaging, that's transformational. It's about what results do I deliver and how do I wrap it in an offer that protects my profit, energy, and my time. When you turn your services into signature offers, you stop reacting to what the client thinks they need and you start presenting what you know is going to get them the best outcome. Stop itemizing your labor is basically what I'm trying to say, and start leading with your strategy. Packages do a few critical things for your business. They create structure. When your pricing is bundled into a named, clearly defined tiers like basic, premium, or executive, you create your boundaries. You take the guesswork out of what's included and eliminate back and forth negotiation. Clients know what they're getting and, more importantly, exactly what they're not. It communicates the value. A package doesn't just say, I file your tax returns. It says, I'll prepare your return, check for credits, secure your data, include your audit protection, and follow up if there's anything that goes sideways. All in one clear offer. It shifts the focus from price to outcome, and the shift is everything. And then third, it protects your profit. Without packages, you're constantly adjusting to answering, how much is this? Or can you take this off? Or that's not a business model at all. It's not. That's a discount trap. Packages give you a built in margin, built in boundaries, built in upsell opportunities. When a client asks for more, the answer is simple. That's part of the next tier. See? So yes, raise your rates, but raise your delivery too. Package your brilliance, name it, price it, own it, because structure creates consistency, and consistency is always going to lead to a profit. All right. So you've made it through the mindset, you've run the math, and now you see how real pricing moves are made. Now it's time to go check your own house. Look at what you're charging, look at what you're doing, and are those numbers in alignment? Because if they're not, this is the moment that you need to adjust. This is your pricing integrity, and it's not just a thought exercise, this is action. So please go pull up the resources. Pull out your rate audit sheet, list every service that you offer from 1040s to Schedule Cs to audit protection. Write down your current rate for each and write down what the service actually costs you in time, overhead, and effort. Compare it to the market rates that you've gathered and then decide, is this number serving me or selling me short? You may want to raise the rate. You might want to remove it altogether. You might say, I don't even want to do this no more. I don't want to offer bookkeeping, or I'm no longer going to organize receipts for my clients. They're going to have to come in with this already done. Right. And if you've been guessing, undercharging, or you haven't reviewed your pricing since you started, now is the time for you to get in there and go and clean it up. Grab your profit first calculator and revisit your competitive research. Use the pricing scripts when you need language that protects your boundaries. You have every tool now. It's time for you to use them. And most importantly, please don't do this in your head. Do it on paper, own it in writing, and decide it with your full chest. Because from here on out, the number that you charge is not going to be random. It's going to be a reflection of your knowledge, your structure, and your standards. This is your integrity check. Do it, review it, and then move like your value is non negotiable. Because let's be honest, you don't need to overhaul your entire business overnight. You just need to start moving differently today. The last 2 weeks, we were talking about contracts and how we're going to be able to outline those. Everyone who turned in their homework, please understand that we're leaving that contract open because we're going to double back once we get done with pricing. And we're going to list out how the pricing is reflected in that contract, right? So here's your challenge. Nothing complicated, just 3 quick high impact money moves. One, raise one price. Pick your service and raise it. Maybe it's your 1040, maybe it's your Schedule C, maybe it's that audit protection that you've been giving away like a bonus where people just call you with their letters. Stop doing that. Raise it by $25, $50, $100, whatever reflects the value that you already deliver and matches the market rates. You don't need to explain, you just need to decide. And this is your first boundary. Draw it with confidence. 2, bundle one service this week. Look at what you're already doing and package it. Do you prep business returns and do cleanup, bookkeeping? Bundle that. Are you offering tax prep and answering client emails year round? Bundle it. Take 2 or 3 services you already offer and turn them into one offer and one price. This creates clarity for your client and controls your profit margins. And number 3, practice on your pricing script. The next time someone asks you how much do you charge, do not flinch, do not wing it, and don't shrink. Use one of the pricing scripts that you've been given. This falls under our premium tier. Here's what's included. Or this rate reflects the compliance protection and year-round support that I provide. Say it out loud and practice it in the mirror. Own it in your own next quote conversation, because the confidence isn't just a vibe, it's a skill that you have to work on and build and practice. These are small moves, but I guarantee you they're going to shift how you feel, how you show up, and how you get paid. The next level isn't about waiting for you to be perfect. It's about starting to move like the expert that you already are, right? We're going to take it in baby steps. So raise one, bundle one, say one, then do it again and again until pricing with power becomes your new normal. Okay. Let's end this with some precision, all right? You are not in business to trade forms for dollars, because the truth is anybody can fill out a form. We know that because the tax industry is not regulated. What your clients pay for and what they rely on is everything around the form: your insight, your interpretation, your guidance when they're unsure, your accuracy when it matters the most, your protection when the IRS starts asking questions. You charge for the experience, for the access, and for the outcome. So don't let your pricing reflect a task, let it reflect the results. When you say your fee, it shouldn't be based on the form number it should be based on where the value is. And the value is this: peace, clarity, protection, and confidence. Not one of those can be printed on a tax return, but every one of them is part of what you deliver. This is a professional service that is high responsibility work, that is real pricing reflective. So repeat it, not for hype, but for alignment. I price like a pro and I charge on purpose. Now document it, say it, stand on it, because what you do matters and what you charge should reflect that. Let your voice lead your value. Let your math match your mission. Raise your rate because you're worth it. Until next time, beautiful people.